Garima, risk to the downside, how bad, and how does it impact India's longer-term outlook?
Currently, the second wave which has hit India, we've seen predominantly it has impacted personal mobility far more severely than other macro indicators because the nature of lockdown so far have been very different from the first lockdown. For instance, you have seen manufacturing see a limited impact. Likewise, agricultural services have been working fine. Likewise, you've had issues where e-commerce delivery earlier was not allowed in 2020, but it has been allowed right now. Transport sector also has been partially working, and the reverse migration of labor, which we saw last year, has been far less muted now. So while the gravity of health crisis is severe, the economic impact of this particular wave is likely to be far less subdued than we saw in the first wave. But of course, it does put questions to the ability of India to spring back quickly. And in that context, I would be a little worried about the pace of vaccinations, which have been quite underwhelming so far.
So regardless of what you say, that V-shaped recovery is not happening anymore, something that was expected months before. In terms of getting back to double-digit growth, realistically, how soon can that happen?
Optically, the first quarter of the current financial year anyway is going to be double-digit growth because it's base effect that's going to be supportive. The first 2 quarters of the current financial year, notwithstanding the second wave, are going to be in double digits. But in all sincerity, I think because of the impact of the second wave and the diversion of expenditures the states would have to do towards the health crisis and the lackluster pace of vaccination, I think we'll be reasonably far away from a double-digit growth even in FY23. So I'm looking at FY23 growth of not more than 7.5% right now.
Elara, I mean, figures we just had a short while ago, again, under 300,000 cases being reported. But, you know, the thing is the true human cost is incalculable and is likely to be much, much higher than the official numbers here as well. Does that in any way show itself in the economic data in your view?
So far, not quite severely. Just to quote you a number, the total number or the average daily e-way bills, electronic way bills, which is basically a bill that is generated for consignment of goods in India once the goods are moved from one part to the other. The daily run rate for the first 2 weeks of May was the month where maximum number of states in India went into a lockdown, has been about 1.6 million. The 1.2 million, pardon me. Now, this 1.2 million compares to 0.6 million same time last year when India saw a great lockdown. So far, it is not manifesting in numbers as severely as mentioned. But yes, the tragedy of the human impact in terms of the severity of crisis, the sheer number of cases India has seen in daily run rate has been quite overwhelming the healthcare infrastructure and most federal and the central governments of the country.
Elara, the thing here is, of course, we've got the central bank trying to be as accommodative as possible. Are they doing a good enough job? They've been, of course, taking measures to ease liquidity concerns and that sort of thing. What else could they be doing, if anything at all?
So far on 5th of May, proactively as the wave started to worsen, the Reserve Bank of India announced liquidity measures for healthcare infrastructure. They also relaxed norms for one-time and working capital requirement of MSME and the small businesses. But most in India, including me, until the second wave hit us, were anticipating that RBI will probably move towards policy normalization as soon as towards the second or the third quarter of the current financial year. Now, the sheer impact of the current wave has pushed ahead the expectations of any policy normalization. So right now, I think the best the RBI can do is keep the liquidity going, keep the policy rate quite accommodative, and they've already announced that they're willing to be as accommodative as till the time requires. They have dropped their time-bound accommodation guidance. And most importantly, they can ensure that the borrowing program of the government goes by very smoothly because the government is expected to borrow in the current financial year only about 10% lower than what they borrowed in the last financial year. So that is another thing that they would be prioritizing as a central banker.
Garima, isn't it true that the RBI has used up most of its conventional space already? I mean, if you take a look at its toolkit, if things turn for the worse, what's available?
Right now, unconventionally, for the first time, I should say, since 2011 or 12, RBI announced a calendar for open market operations. Okay, and they call this GSEP program, GSAP 1, GSAP 2. So they have been buying bonds openly under this program. If the crisis worsens, they can actually increase the quantum of the purchases under this particular program. Last year, our government, RBI, bought bonds worth close to 3 trillion rupees, central government bonds. They also bought bonds of the state governments and federal governments. I believe the crisis worsens. This will be the tool that they would continue to use extensively to make sure that the liquidity situation within the banking system and otherwise remains quite accommodative, and there is no sudden shock to the system.
Garima, many people have pointed to the inequalities which have been heightened by what's been going on with the pandemic. Others have also pointed to the shrinkage, particularly in the size of the middle class. These things cannot be repaired that easily. So, Garima, tell me something here as well. I mean, does this have long-term implications for the country?
That's right. The biggest worry of this crisis has been that, after GST and demonetization, this has been the third crisis which has nearly wiped out India's unorganized sector. So while the process of formalization, the movement from unorganized to organized is on its way, it is likely to have a midterm impact on the employability and the ability of the lower middle class and the middle class to spend, because a significant part of India still is in unorganized sector. A significant number of sectors also operate under unorganized space. So I do think, this could pose a challenge, and hence, the government of India has been extending credit guarantee facility for the MSME sector. I think if the crisis worsens, the government may look to expand this further into the current financial year in it. But I do get a little worried if India is not able to post or record double-digit growth. We will see probably some pullback in consumption in the near term. The only saver is likely to be the government spending, which right now looks to be the only positive element in the medium term.